markets may result in the loss of your deposited funds. Please ensure that you fully understand the risk or seek independent advice if necessary. ETX Capital provides an execution-only service, and therefore any market analysis, opinion, commentary, or other information which is provided during this webinar is for educational purposes only. All traders must understand there's a high element of randomness to the markets, and therefore they will experience both winning and losing trades while following a trading strategy. Different traders following the same strategy will achieve different levels of performance. Past performance is not an indicator of future results. Now, there's a slight problem on my end with, don't worry, we're gonna have the class, but the thing that shows me what you're seeing isn't operating. So can you just answer the question I'm sending to you right now? Can you? I just want to make sure that everybody out there can see and hear everything because the monitor just is not working properly. Now, ETX is a fast-growing financial services company, and we are based in London. We are authorized by the FCA, that's the Financial Conduct Authority, and our parent company, Monocor London, is a member of the London Stock Exchange. When you trade with ETX, you can either use our ETX Trader Pro platform or download our ETX MT4 platform. Whichever works best for you, you can use one or both. Just contact customer support and they'll make sure you get everything you need. You can also try out our brand new ETX Trader Pro platform, and you'll find it's one of the most dynamic trading platforms available in the marketplace today, along with our great charting system. Now, tonight's class is being recorded. If you want to see a recorded version of tonight's class, just use the same link you used to come to tonight's class, and you'll be able to see a recorded version in about 24 hours. Okay. Once again, okay. Actually, nobody's written in a response to me, so I don't know if you can actually hear me or not. So I'll keep going on, but I would appreciate it very much if somebody could just let me know you're getting the audio and you're seeing the screens that you're supposed to be seeing. Now, tonight we're going to be learning how to build a trading plan and why a trading plan is so important to your trading results and your trading business. Now, I have downloaded or offered in the handouts. Let me make sure that's even working at the moment. Hold on one second. Okay, yes. In the handouts, there are 3 different files that you can download. They are only available during this class. You cannot and will not be able to get them except during this class. So they're right there. Just click on to download and to save them somewhere, because you will not be able to get them in any other way. Okay. So I've given you one on a review of this class. I've given you a sample plan, and I've given you an explanation of how to use it to build a trading system. So just click on it, even if you're on a mobile device, download it to your mobile device, because they're very small files, but you won't be able to get them any other time. Now, in order to become a successful trader, you need to develop a written trading plan where you put all of your trading rules in one place. Now, a lot of people think that this is all about a strategy. Okay, what indicators or what analysis you're going to use, but that's only a small part of this whole process. Okay. Your strategy is just one of the things you put in here. Because basically your trading plan is your Bible, and what it does, it makes sure that you check everything and aren't making a mistake. It keeps your emotion out of your decisions. It makes sure you're not investing too much in the market. It keeps track of your risk management and your strategies and your risk tolerance, and allows you, but you don't have to start off with this thing that's gigantic in the beginning. You can keep adding to it and adding to it. And today with computers, you can have everything laid out in Excel spreadsheets and have it very, very easy. And it's really just a checklist of not your individual trade. It's your checklist of your trading. Okay. It's your daily experience, your weekly experience. It's your review of all the trades you've made, how many trades you haven't analyzed. It gives you a point in which to determine how you're doing in the marketplace. So a trading plan should be thought of as a template for trading the markets. Perhaps an even better way to describe a trading plan is that it's a checklist. This checklist will contain each aspect of making a trade in a logical step-by-step sequence. Now, the best way I can help you with this is describe it as a business plan. Forget trading. Say you want to open up a clothing store. Okay. You want to open a clothing store in the mall. Well, first you have to raise some investors. Okay. They want to see a business plan with projections of what you can do. They don't care whether you're going to carry pink shirts and blue skirts and orange shoes. They're not concerned with that. They want to know how much inventory you need, what your turns will be, how many employees you'll need, what hours you'll be open, what your costs will be, what your insurance will be. But that's only the very beginning. Okay. Once you have your investors, okay, or you have your business plan, and that's the hardest thing. I know back in the days when I was an accountant, and somebody had asked me to create a business plan for whatever they were raised, wanted to be involved. There's a million questions you have to ask, because you have to figure everything out. It's a big thought process. But then you keep expanding from there. Okay. Because then you want to decide, okay, you've got your lease, you raised your money, you've got your lease on your store, the mall hours that you're required to be open, you've got your insurance. Well, now you got to figure out how much inventory you got to have, what sizes you should carry, what colors you should carry, how you should lay it out in your store. Then you have to decide how many employees you need to have, what hours those employees need to work, what shifts will they work, maybe what health insurance plan you have to have, how you're going to pay them. Okay. All of that keeps getting added in as you move to the final process. Well, that's what your trading plan is. You don't have to start out with this big mega thing, but it's important. So let's just start with, what trading strategies are you going to trade? Not every one that you've learned. What are you going to do? You can be like me. I look at my trend lines, my support and resistance. I look at my volume. I look at my economics count. That's basically it. I mean, then I look for chart patterns. Okay. But you decide what strategies you're going to use, not what indicators, what strategies. Then either figure out what currency pair or what commodity or what stocks you're going to look at, because that's one of the biggest problems with online trading. Online trading, whether you're trading with ETX or somebody else, offers you so many assets that you can get yourself lost trying to get involved in too many assets. I mean, I was a trader, long time ago on the floor, and I only traded agriculturals, but I only traded orange juice and coffee. That was it, because that's the most you could prepare for. I see people out there jumping from the Euro JPY over to the Chinese yuan, and from there I see them going over to buy Apple and then selling gold and buying oil and then trading some Bitcoin. Oh no. If you can have all that in your trading plan and that's what you want to be, it's fine with you. Just like you can have a store that's a men's store or a women's store, you can have a store for everybody, or a store that's dedicated to teams. You decide, but you have to figure out what your plan is. Then the hardest part is now figuring out your daily routine. And when I say this, I'm not talking about, okay, this is what I'm due to make a trade. You have to say, okay, now most of us aren't full-time traders. Well, most of you people in the audience, I would assume, have a full-time job or a full-time student or a full-time parent, something that you can't sit at your computer for 12 hours a day trading. A lot of you guys out there and a lot of you women, The kids go off to soccer practice, you have 3 hours in the evening. Or you don't, you have Tuesdays off, so you trade on Tuesdays. Or you do it every evening when, everybody's gone to bed, whatever you do. But you have to figure out what your routine is, because too many people want to just trade. And that should be about the smallest part of your plan and the smallest part of your routine. Analysis, building your trading plan, reviewing the markets, making your analysis, analyzing each of your trades, analyzing your progress should be most of your time. Just like a businessman, you could sit in that store and spend your day on Facebook and social media and not spend your time reviewing your inventory, your turns, what's going on. And what happens is you eventually lose the business. Okay, analysis and analytics is more important than just doing it. So you should begin your trading plan with just your trading strategy, because most of you out there are already trading. So you have your strategies. So you know what they are. A lot of you don't ever write them down. You just look at charts and you kind of just go for them. So writing them down gives you a whole better thought process. So if you're trading price action setups or of key structure levels, structure trading or advanced patterns, then you should put them first. This will act as a blueprint for what you need to do each time you interact with the markets. You firstly need to back test your strategies in order to find out whether they have positive expectancy. Simply put, are they making money? Because you'll find that some strategies work very well for a couple months and then they die on you because the markets change. You need to test them all the time. So in addition to strategies, you also need to put your risk tolerance and your money management rules. And risk tolerance and money management are the most important key elements of a trade. And no trade should ever be made without understanding how it fits into your money management rules and what your risk tolerance is and what your risk reward ratio is, because they'll stop you from making bad mistakes. Sometimes they'll stop you from making a good trade, but that's fine. So having written strategy with your risk tolerance and money management is like having a market blueprint. The blueprint is essential for developing the discipline that will lead you on the road to success. If you find yourself not following the rules in your plan, then you're deviating from your plan. So the next thing you should state is what instrument you're going to trade. For example, you may be focusing on the euro US dollar, perhaps the euro US dollar and the pound, but make sure you put it in your plan, because if you have things written down, even though you read some headlines about Pepsi buying SodaStream or Amazon doing something, and you think to if it's not in your plan, you can say, guess what? I'm not going to make that trade because I don't know that much about Amazon. I'm just guessing. Because the assets you want to follow and know and that you want to trade should be in your plan. Okay. Now, once you have some bare bones thing put together, okay, now this is the part that everybody hates. If you can make yourself like it, you'll find out you're going to be in the markets longer. My friends that have been trading, for 40 years like I have, they follow these. If you can get yourself to enjoy this part of being in business, because trading is a business, and if you can find yourself more enjoyment out of doing the analysis, doing the back end, looking at the books, okay, taking care of the business, then sitting at the register talking to customers, you're going to find in the long run, you do a lot better. So part of your thing that you have to do, and like I mentioned, if you're a 2-day-a-week trader or the afternoon trader, or when the kids are a soccer trader doesn't mean you're actually making trades. But you have to decide when you're going to be at your desk, what your trading phase is going to be, what hours are you going to trade, how many trades are you willing to make in a session. Okay, I've seen people come home from a busy day at work, look at the markets and charts for 15 minutes. Before I know it, an hour later, they've made 15 trades. I'm not saying they're going to lose their money, but they made these 15 trades And a couple were successful, a couple were losing, but they did all that work to make themselves $100 when they could have sat a little bit slower, analyzed the market, and gotten one trade that would have made them 125. Now, during your trading phase, you will follow your checklist. This is crucial in order for you to put yourself in high probability trading opportunities. And this is a line you should always remember. High probability trading opportunities. We don't only want to trade that'll make us a couple dollars. We want to only make those trades that have high probability trading opportunities. So this will include things you look for in the market and what you see before entering a trade. In your post-market phase, your main activity will be record keeping your trades, keeping a trading journal. It's important because it allows you to analyze your trades and find out whether you are following your trading plan or not. Every trade you make should be written down. The results of that trade, the outcome should be written down. Not just, oh, I made $50 or I made $500, made $2,000. Did the market do exactly what you thought it would do? What strategy did you use? Did the Fibonacci support levels and trend move exactly the way you thought it was? These are simple notes to yourself so that you can make yourself better. You need to analyze your trades. And one of the most important reasons of having this trading plan, having the analysis to pre-market, it keeps your emotion out. It keeps you in control of the market. You know, the people I told you about, the friends I've seen that, you know, spend 15 minutes when they get home from work, look at charts and then start trading. They're not in control. The markets are in control of them. You need to be in control. So make sure that you maintain a trading journal, which is logs all of your trades. This is important because it allows you to analyze your trades and the success of the plan you adopted. It should include entry dates, exit price, stop and limits, total profit and loss, and finally notes that are your personal notes on each trade. And today with Excel, you can just log all this in pretty quickly. But your daily routines are crucial to your trading success because based on them, we build a ritual that will help us maintain a high level of focus and a state where we perform at our best level. Look, if top athletes can spend their days, you know, top tennis players, spend hours a day on that tennis court, spend hours a day learning about their opponent, you know, football teams, soccer teams, basketball teams, spend hours learning new plays, new attempts, practicing and practicing and practicing and learning and learning and learning. Okay. Well, if a top athlete or a top sportsman has to do this, why shouldn't you have to do it? Your trading plan should contain a written description of what you would do in the markets. This includes things like what your trading edge is, how you would trade when you trade it, what time frames you will trade, your strategy for risk management and profit taking, and your overall goal as a trader. Now, if any of you played sports in college or high school, you know you kept a book. You kept every play, every note, everything your coach said, every instruction to you. You knew everything and you were forced to memorize. Then when the game was over, you sat there for hours and hours reviewing each play, each tape, each thing that happened. So I call this all stick-to-itness. It's not really a word, I made it up, but stick-to-itness. The creation of a trading plan is highly useful as it reduces the possibility of bad or irrational decisions based on emotion. If you have a written trading plan, then you have a trading filter that will filter only high probability trading opportunities. It is important to have a written plan because in order to keep a high level of discipline, you should read it every day. The key to discipline in objective trading is to establish a trading plan where you put all necessary rules and stick to it. Now, I can ask 100 traders if they would send me a copy of their trading plan, and I guarantee you, nobody will. I don't think I've ever, in all of my years teaching, gotten one person to ever email me a trading plan. Unlike business owners who generally have a business plan in order to provide a strategic vision to employees and stay focused on their primary line of business, most traders never take the time to create a business or trading plan. Now, in most lines of business, time is the main driver for evaluating performance. But we have a unique luxury. In the markets, there is no such thing as time. Because you can trade today, or you can trade tomorrow, you can trade next week. There's always trading opportunities. Okay. Your portfolio sits there and you don't make a trade today because you're working on your plan. Does it affect anything? No. It's not like your store and you don't open today, so your employees are still racking up the bills, your rent's still due, your insurance is still due, your overhead's still due, and your inventory is sitting there. There's always another trade to be made. Okay. So now comes a very important part, and this is evaluating your own performance. Everybody thinks their performance is the dollar amount in their portfolio. Did they make money this month? Well, say I made 50 trades this month, 49 were losers, and I had one big trade in the middle of the month on Bitcoin that fell $2,000, and I made a ton of money. Were you a successful trader that month? No, your portfolio went up a couple dollars, but you had 49 bad trades and one lucky trade because you never expected Bitcoin to move that much. It just happened to move a lot, so you did really well. So you have to be critical of yourself and evaluate yourself. So those of us that have been trading for some time know that 1 year stellar trading performance can be wiped out in a 2-month binge of destruction. And what you don't understand is the markets can turn against you and you don't realize it. Like I said, I was an agricultural trader in 80, 81, and 82. There were 3 years that the money was rolling in so fast, I couldn't spend it fast enough. I didn't realize the markets by 83 and 84 turned against me. And I was chasing my trades. By 85, I was broke. Never realized, because I didn't have the emotional wherewithal and the maturity to do all this. And I never stopped to reevaluate how I was trading. I was so busy chasing my trades. Didn't realize that the whole markets had shifted. So the way to address the tracking of your performance is to create a set number of trades that you evaluate against a key performance metric. Now, me today, I personally use 10 trades. I stop everything I'm doing after I've finished 10 trades and do not make another trade until I've analyzed these. Now, this is my rule, not yours. You decide what fits you. A trading plan is very personal. There's no rules to it. You decide up front. So for me, my number is 10. This applies to both swing trades and day trades. On the average, it'll take me approximately 3 months to place 10 swing trades and about 4 days to place 10 day trades. So I make very few trades. Okay. If you're a guy who's making 10 trades a night, well, stopping everything to do analysis might not be good at 10 trades. It might be 30 trades or 50 trades. I only mentioned a time element so you can see how long it takes me to place that number of trades based on my trading style. But you can easily perform the same math in your own head. So what is the number of trades you'll use when evaluating your trading activity? You decide. Now, the important thing is keep it simple. I may be talking a lot, okay? I may be telling you a lot of things, but it should be very, very simple. Don't make it overly complicated. Figure out what method you're going to use to evaluate your trades. Okay. Did the trade do what I said? Did I make profit? Did I overinvest? Did I underinvest? You decide. Now, some of the other things you need to incorporate in your trading plan, especially if you're a guy who's got a lot of active trades, is what's the maximum at any time you'll have in the market. Okay. Because even though you're using your risk-reward ratios, you're using your proper risk management, If you have 20 trades open and you have $500 risked on each trade, well, that's $10,000 you have open in the marketplace. Now, that could be a lot of money that you have a risk in the marketplace. So you need to figure out how much you're willing to have open in trades at any given time. Because that may say, you know what, I got too many trades. Either let me close a couple of these or maybe not make this trade. The next thing is, what time of day will you trade? I see guys, when they have an hour free at lunchtime, when they have an hour free in the evening, when they get home and the kids run out, and they're popping in and out of the markets and trading. Well, the markets change day by day by day and hour by hour by hour. Okay. For instance, the US is very, very boring by the time 10 or 11 o'clock in the morning have rolled around for US time. Because all the economic events have happened, all the headlines have happened. So yeah, you might have some freaky things. And during earnings season, sometimes earnings are released after markets. But otherwise, there's not much volume and much activity. Okay. You need to be aware of that. You might only want to trade during the close of the Asian sessions, the open of the European sessions, or when the US markets are open, or depending on what asset. If you're trading currencies as opposed to oil and gold, decide. Because you can use different strategies and different evaluations during different periods of the market. Then you have to figure out what your trading edge will be. What's going to help you make your decision to trade? Are you going to be looking for high volume, tight spreads, breakouts, early range breakouts, whatever you're going to use to make your decision? Okay. Now, a strategy and your edge are slightly different, but they're pretty close to the same. Like I said, I use chart patterns, support and resistance and trend lines and volume, and I trade breakouts of chart patterns. That's what I'm a momentum trader, but you have to figure out where you fit. Okay. But don't get 20 or more, and I've seen people with so many things built into their edge system or their strategy system. Now, day traders will want to focus on events in the news, while long-term traders will want to trade on securities that are developing new growth or new business. Okay, decide what asset you want to trade, how you're going to trade it, what strategy you're going to use. If you're just simply a day trader, okay, if you're just looking for assets, like we're all ETX, so we're mostly all day traders. So we're just looking for assets that have momentum that day, that maybe you're going to have news or an economic event that's going to give them that momentum to move in a direction. Because remember, your goals are very important also. Because a goal without a plan is just a wish. Then again, sit down and figure out your strategies. Don't overcomplicate them. I recommend everybody, no matter what strategy you use, determine the support and resistance levels. Draw them on all your charts. What I do is any asset I'm trading, I'm always aware of what the current support and resistance levels are, what the current trend line is. Okay, and I've got my patterns because these are things I'm looking at all time, because I'm only looking for assets that are either bouncing off of a resistance coming to support line, because in between they're unimportant for me. Okay, decide if you're going to look at price action signals, what you're going to be looking for, what sign you're going to be looking for. Are you looking for something, the candlestick to break the support line, or whatever you're going to decide. Then the next important rule or plan you have to have is how you're going to place your stop loss. Now, we're not here to discuss stop losses tonight and the strategy of stop loss and different kind of stop loss. You just have to decide which and how it fits your risk management and your money management, and what's the maximum threshold you reach, and then how you're going to determine where you're going to place your stop loss. Is it based on volatility? Are you going to base it on some other factors? Are you going to use sliding stop losses? Are you going to use hardcore stop losses? You have to decide, but it needs to be in your trading plan. And then you also need to have when to exit. Do you just hope and pray that something does what you want and let it get stopped out? Or when you see it bounce off the resistance and not go through, do you close out your trade because it didn't do what you said? Do you say, the minute it breaks the trend line, I'm closing my trade? You decide. But again, keep it simple. You need to have an exit strategy for good trades and an exit strategy for bad trades. Maybe you'll say, if I'm trading something in a rally going up, the minute it becomes overbought and RSI, I'm closing my position out. Take your profit on. It's your decision. But for some reason, traders have fooled themselves into thinking that successful trading only boils down to the latest algorithm or technical indicator. This couldn't be furthest thing from the truth. When you are trading, you may forget that there are human beings at the other end of the buy and sell transactions. Part of the game of trading is not revealing your hand, but the smart money will constantly force sharp moves up and down in order to throw off the little guy before there's a big move. You're probably asking, what does a positive attitude have to do with this? While everyone may have stop loss orders, technical indicators, charts, access to news, there are some traders who are able to translate all this information to successful trading. Others that can't. So the success factor begins and ends with a winning attitude. And you'll find that that attitude can make all the difference in your trading. If you've had a fight with the wife, you had a bad day at work, just got in a car accident or almost an accident, you just came out of a rush hour, you might want to say to yourself, you know what? I'm not in the right frame of mind, don't have the right attitude today to trade. You always need to be aware of how much money you want to make per trade. A reasonable amount of money, not greedy. Okay. Do I want to make $200 in this trade? Once you do, maybe you say you want to exit the market. Then the important thing is when to take breaks. I see guys trade until they're exhausted, day after day after day after day after day. I have a firm rule: after 100 trades, guess what? I take a day off. Okay. Not a holiday, not a Saturday, not a Sunday. I say, tomorrow I'm not turning on my computer. Why? By having this discipline, you get your breath away, but you also remind yourself that you're in control of the market, not the market in control of you. And this goes into your trading plan. Okay. Goes on your Excel spreadsheet. Okay. Whenever it's logged in on it, you turn off the computer and walk away. And the other one is up and down. Okay. Too many traders get too involved in everything. For me, if I lose 2% of my trading capital at any point during the day, and I'm not talking about closing trading any stuff, if my trades are all moving against me at the end of the day and I'm down, they're still open, but I'm down, guess what? I close them all out, take my losses, and go away from the computer for the rest of the day. On the other hand, if I make a couple trades and I'm doing really well, and I've made 7.5% of my trading portfolio in one day, guess what? I close the rest of my trades, take my money, put it in the bank, and I'm happy. Again, when you get over elated by the marketplace because you did really well, we tend, not you and I, just human beings as a group, psychologically, we tend to make mistakes. We get overconfident because you made some good money. And now it says you start raising your positions, you start moving your risk reward, you start getting too happy with yourself. You make mistakes. Or you're having a bad day, and it's not that you're necessarily having a bad day in the markets. The markets are themselves having a bad day. Well, get away from it, walk away. So it's important that you include all this. Now, we've talked about a lot, but I've given you, there is no trading plan master, so to speak. There's no book I can give you that you fill out the lines. There isn't such a thing. I gave you this simple trading plan as a handout. It's very broad. I didn't make it up. I found it, but there's really nothing personal in here. It just gives you a guideline. Okay, I've given you some other pieces of information, but it's really how much effort, and this effort is very difficult for a lot of people. They don't like writing things down. They don't like taking the time. They want to trade. They want the excitement. If you can learn and get yourself more excited, you're the businessman who opens up the store. Okay, yeah, it's exciting to see people at the register, but it's more exciting to see the money in the bank, and it's more exciting to see on your sheets. Look at that. I got that right. You know, I brought in 5 reds, 6 blues, 2 pinks, and I brought in more large and medium. Look at that. They all sold out. And I get, well, you know what? You're proud with your results. So you find it in the analysis, not sitting up the register, talking to everybody every time it rings. If you can get yourself more into doing the business end and realize this is a business and build this trading plan and figure it out that you have to write it down and spend the effort at, you'll find that eventually you'll get into that group. I'm not saying it's going to make you rich. I'm not saying it's going to make you money. What I'm saying is you get into that group of traders that survive in the marketplace. So on that note, I'm going to say goodnight to you. We just recently posted the classes through September and October. We have some new classes. We have an exciting new one on moving averages, and we have one coming up on stochastics. So look for those, and I'll see you tomorrow night. Thank you very much, and have a good day. Bye now.